Hello, everybody. Welcome to VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. We are bringing the VRIC to you each and every week with our series of expert online panels. I'm very excited today to present this one to you. We have Willem Middelkoop, the author of The Big Reset and the founder of the Commodity Discovery Fund, as well as Christopher Aaron, the founder of iGold Advisor. Gentlemen, it is great to have you both on the program today.
Great to be here.
Jesse.
Well, I want to start with a bit of a broad question. Feel free to take it wherever you'd like. And that is, what are the main things you're currently watching when it comes to the global economy and financial markets today that you think more investors should be paying attention to? And Willem, I'll start with you.
Yeah, it's like everything is changing now. As you mentioned, I wrote The Big Reset in 2013. Nobody was talking about the reset, and now everybody's talking about the reset. You see a reset in the gold market. You can speak about the geopolitical reset. I think the new Trump administration is almost revolutionary. They want to change everything. They want to break things. So lots of moving parts. Let's keep it to that.
And Christopher, what about yourself?
Yeah, I'll tell you, Jesse, I'm foremost a price analyst. So, I keep track of all these things that are happening around the world because these are the drivers of the markets, as Wilhelm stated. However, I like to boil it down to the actual price charts, the what is happening more than the why. That's just my philosophy. And so I'll tell you the single most important thing that I'm looking at right now is the gold to silver ratio. It's kind of hovering in this 100 level. That tends to show stress in the global financial system. Anytime it's above 90, it's showing stress. The one thing that I will say is I want to see the gold to silver ratio come back down lower in favor of silver, back toward 90, back toward 80, because otherwise we might be looking at something here that is a generational break upward in that ratio in favor of gold, in disfavor of silver. And I would not want to see that for what that portrays for the global industrial commodities, especially.
If I could add 2 cents to that, I watched that ratio as well. And in the past cycles, we always saw the ratio shoot up towards 80, 90, or 100 before it really started to move down. So it's like a false breakout to the upside. And when silver starts to outperform gold, that's always the second phase of the recovery of precious metals market. So I also expect silver to start to move up quite strongly over this summer and then really start to outperform gold. And then the real recovery starts in our markets.
Great. Well, let's shift to discussing gold and silver, both the metal and the miners. Let's start with gold. What do you see as the current catalyst driving gold at this point in time? Are we still in the early stages of this bull market? And any thoughts that you have on the potential opportunity presented by the gold mining sector at present? Christopher, I'll start with you on this one.
Yeah, the drivers for gold are definitely not happening out of the West. That's one thing that I can say for sure. I've been involved in this market for 17 years now. So I've been through the 2011 peak, the 2015 drawdown, the global financial crisis. I know what a peak looks like as far as psychology amongst, let's say, the average person in the West, or the person you might see at the gym or at church or at school, et cetera, et cetera. We're not seeing kind of psychology now like we did in 2011, where the average person is becoming interested. So it's telling me that most of the buying is still happening out of the East. It's happening out of central banks, large sovereign wealth funds, et cetera. Maybe some buying coming out of the average person in China or India. But as far as I'm looking at the gold market, I can say that maybe this market has gotten frothy over the last month or two as far as absolute price chart, but I don't see the kind of psychology that would be reminiscent of a long-term top right now. I'm curious if Wilhelm has seen similar.
Yeah, well, I agree. The large demand is coming from the sovereigns, and this is like a huge shift. I remember starting to invest professionally around 2007, 2008, and checking what the Chinese demand for gold was, it was almost non-existent. And that only started after the collapse of Lehman, that China really started to buy into this market. And now it's not just China. Look at the Polish central bank. It's growing their gold reserves 10x. Same for the Czechs. So I would say all countries east of Germany are adding to their gold reserve. And then the European countries stopped selling gold and are repatriating gold. So this is a very strong market, and this has to do, of course, with the bifurcation in geopolitics. You have the West against the rest of the world, and the rest of the world, let's say the BRICS alliance, they're fed up with the current dollar system. And when you buy gold, it's the anti-dollar trade. You actually vote against the dollar. So the dollar system is at risk. Trump is creating, he's trying to isolate China, but he's in the course of isolating the US. So I think this anti-dollar trade will get stronger. So I think we're still in the very first innings. And that's also visible because, like we just agreed, silver is not participating yet. Only the senior gold producers have been going up quite a bit, but the junior space is still at rock bottom level and is just starting to break out. So according to our analysis, the major recovery of our markets is just starting now. So we're closer to the beginning than to the end.
Yeah, and some very interesting comments about sentiment there, Christopher. I noticed you did a poll on X where you asked how many people around you know anything about, this was when gold hit 3,000, know anything about gold hitting 3,000, and everybody answered basically nobody. And it's interesting because we live in our bubble of doing these type of shows, and I'm talking about gold every single day of my life. So I just assume, well, everybody, but nobody, you talk to your average person, they're just completely confused by what do you mean? Yeah, so that's a really good indicator. I do want to dive deeper into the gold mining sector. The theme of that conversation for a few years now has been, why aren't the miners keeping pace with the gold price? Normally in gold bull markets, the miners perform much, they're kind of a levered play on gold. For a while that has not been true. It seems now some of the majors are starting to wake up. What are your thoughts on the gold mining space today, and where are you looking for value? Do you think the majors, your Barricks, your Newmonts, your Agnico Eagles, still present an attractive value proposition? Do you think they could be overbought and it's would serve people more to look at the developers and maybe even the explorers, obviously depending on their ability and how much time they have to do due diligence? Christopher, what are your thoughts?
Yeah, if I can just go back to that sentiment thing for one moment, Jesse,
Yeah.
and I won't spend too long because it's so key. I just want to give one anecdote from my own career going back 2010, 2011. I started investing like 2007, 2008 in this sector. And in 2010, when gold finally broke higher above $1,000 per ounce and it was 1,200, 1,400, 1,500, I had, in my wider walk of life, I had probably 30 or 40 individuals coming up to me, asking me for advice, asking me for which gold miners I like. I don't mean professionally. I mean people that I knew walking about town, people at the gym, friends of friends, my dentist, for crying out loud. And that was back then. That was with gold not even at $2,000 per ounce. Now with gold at 3,000, I have one single individual in my wider walk of life, and it's my sweet aunt, who I love very much, and she's asked me about gold. Aside from that, no one is interested. So to talk about where the value is right now, sentiment is still low, the price is high. Senior gold miners are undervalued, yes, compared to where they should be. Let's call them moderately undervalued, but egregiously undervalued, absurdly undervalued are the defined resources in the ground. We're talking 1, 2, 3, 4 million ounces of gold in the ground that are selling for $10 or $20 per ounce in the ground. Whereas in the last cycle in 2010, 2011, when gold itself was lower than it is today, the defined resource companies were selling for $50 to $100 per ounce in the ground. You just think about that metric, 10 or so X higher in the last cycle compared to where we are now. I think that's the value proposition right now.
Very interesting. Willem, your thoughts?
Yeah, I think we're in a show me the money phase of this recovery. And if you look at the valuations, I agree with Christopher. Look at Newmont and Barrick. These senior producers used to trade in the past cycle at two times NPV, and now they're at zero point 0.7 or maybe one. And the price earnings ratio is often in the lower tens or even sub 10. So that means you can still buy very cheap. And now the margins are exploding. And actually, the producers have a license to print money now. And I'm afraid that gold won't stop at 3,500. We might see 4,000, which even says Goldman Sachs stated that recently. We might see 4,000 in the middle of next year. And I think we'll see 4,000, 5,000. And then the real revaluation, central bank initiated revaluation of gold still has to start, because don't forget the balance sheet of central banks are stretched and they need to revalue gold to improve their balance sheets. And of course, I run a fund. I'm a fund manager. We see the inflow is starting to pick up, but this is mainly the smart money. This is mainly the ultra high net worth, the people who have to invest tens of millions, and they understand it. But the retail, I agree with Christopher on this. The retail is still in a wait and see mode, because on top during the top of cycles, we always see this huge inflow of the retail crowd, but we haven't seen that. That hasn't started yet.
Well, if gold isn't really recognized by the man on the street, silver certainly isn't even coming close to being recognized by your average person out there. But obviously, it has not been performing to the level that gold has. We mentioned the gold silver ratio. Obviously, if we're looking at previous all-time highs, you need triple digit silver adjusted for inflation to get back. Even if we erase the Hunt brothers 1980 silver squeeze and call that an anomaly, in 2011 we got close to $50 again, and we would need over $100 silver if we're looking in real terms. What are both of your thoughts on the current state of the silver sector? We're hovering close to $34 now. I mean, it's been such a grind for a lot of people who got in after silver hit around $30, thinking it's going to go to the moon. We saw the whole silver squeeze movement, and people are getting impatient. What are your thoughts on both the sentiment in the silver sector and the silver miners and potential opportunity there as well? Willem, I'll start with you on this one.
Well, I think silver is the greatest bargain out there, and soon we will see silver starting to move. I think the reason silver hasn't moved yet is that there's no sovereign demand for silver. There's a lot of sovereign demand for gold. So for the usual suspects on Wall Street, it's quite easy to manage the silver price and keep it under control. Why they can't keep gold under control any longer, because of this huge sovereign demand. So that's a big change. But once the real physical demand for silver will come back from investors, don't forget 83% of all silver being mined is used for the industry, just as a commodity. So when the real silver demand kicks in from investors, this will blow through $40. You'll reach $50, I think, in weeks or months. And then you'll break the $50 top, which was the top, as you said, in 1980 and 2011. And once we break $50, we'll see $100 over a very short period of time. That's our opinion.
And Christopher, what about your thoughts on the silver market?
Yeah, silver is an absolutely fascinating market. If I can give one first data point that I'm looking at, it's the global silver miners. If you look at the SIL fund, ticker SIL, I'm not saying to own it. It's an index that I follow. It's just broken a nice downtrend from the 2020 peak. Nice 5-year downtrend, just broken here over the last month or two. It's solidifying above that downtrend. That's a good signal. The silver miners wouldn't be breaking a 5-year downtrend like that unless the sum of the world's silver miners were thinking, hey, we're getting ready for higher silver prices, maybe not quite yet. When I look at silver itself, it looks to me like it still wants to consolidate for a few more months as gold kind of climbs its way higher back toward 3,500. It looks like silver wants to continue consolidating. Let's call it below 35. Might be another 2 or 3 months, might be into the second half of this year. But when silver breaks 35, I mean, Willem, we have similar price targets. I mean, there's a clear shot to the low 40s. And I think from there, I mean, if you rewind back to 2011, when silver last got to the 40s, close to $50, it got up to 42, 43. And overnight, it went from 43 to 48, and then from there, it was close to the peak. So from 42, 43, silver could very quickly get to 50 in this cycle. I just want to give one other sort of anecdote of another commodity. If you think about it, we're talking about silver having consolidated here for, I mean, it's going to be 45 years underneath the $50 per ounce level, starting at that 1980 peak. If you think about, for example, copper, copper made a similar peak in 1980 at about $1.40 per pound. And it consolidated not for 45 years, but for 25 years. It made multiple attempts to get above $1.45. Finally, in 2005, copper broke upward through that 1980 peak. From there, it didn't just double, it tripled. It got to $4.50 12 months after the break of the 1980 peak. It went from 140 up to 450. Okay. So the analogy here, by the way, we saw similar behavior in the oil market when it finally broke out in 2005 above its 1980 peak. So the analogy here would be like when silver is finally ready. I'm not saying it's this year, may not even be next year, but when it's finally ready, can we imagine silver going from 50 to 150 in 12 months after it breaks out? That's along the lines of what I expect.
Very interesting. I want to get a little bit of insight into both of your methods for evaluating miners in the gold and silver space. Maybe just a few things you could lay out for us that you're looking for when it comes to your own investment portfolios, and Willem in the case of Commodity Discovery Fund, and perhaps a few red flags as well, things that you kind of look for to notify you that perhaps this investment isn't worth your dollars. Willem, I'll start with you.
Well, I've been in the discovery investing space for the last 20 years. And what we learned time and again is just concentrate on the tier one, tier two projects, which means the highest quality project, because they will always be bought by senior producers looking to add to their reserves. We were big investors in Philo Mining, huge copper discovery in the Andes, being bought out for $4 billion last year by BHP. We were very early and large investors in the Grey Mining, Australian listed company, was bought out recently by Northern Star, $4 billion. So if you concentrate on the real big discoveries, and the best new name out there is NGX, it's the neighbor of Philo Mining, a wonderful discovery. Another great name is Next Gen Energy, the large uranium discovery of the last few decades. And the valuations are still not very high, so we still see an easy double on both of those names. So that's our philosophy. That's how our fund was able to survive during this very long bear market of the last 10 to 13 years. And we're fortunate. We still have strong inflows, and we manage 150 million now. And stay away from all the promoters who promote all these lousy small names and promise you the next big thing. But only enter an investment after a serious investment has been made, because these large discoveries will take years to play out. So it doesn't matter when you lose the first days or weeks.
Very well said. Christopher, what about your own methodology when it comes to evaluating the mining sector?
Yeah, and so I think this comes back to again the difference between the why and the what. Uh, Willem has stated a lot of the whys, which are exactly what I agree with. You want to stay away from excessive promotion. I mean, there are a number of outright scam companies in this industry. You have to be really careful. I like to get to know managements personally. I just feel better when I've shaken a hand and looked someone in the eye and know how they're using my money to advance their project. All of that said, um, the way that the average investor can see that when they are looking at a chart, for example, which is what most investors have access to, um, you want to remember that gold bottomed in 2015 for this cycle, right? It peaked in 2011 at 1900, lost almost 50% of its value down to 2015. From 2015 through the present, it has tripled. Um, that 2015 bottom is a very important relative low. And so when you're looking at price charts for gold miners, you want to look for companies that at no point in the last 5 to 10 years did they trade below the 2015 bottom level, including during the coronavirus crash of 2020, which is a once in 100 year event. You pull up a price chart. If that company ever traded below where it did in 2015, when gold was $1,000 per ounce, it's telling you that there's something, I don't want to say something wrong, but there's something that's not ideal about that operation. It can either be that they diluted too much and all those excess shares came into the market and you just had selling that brought the company back down below that point. It could either be that they're making ill-advised drilling decisions, where they choose to drill, which acquisitions they make, and so that dilution is not becoming accretive for existing investors. So I would just say that the number one thing that I look for as far as a technical screen is I look for companies where the price chart is maintained above 2015 and the 2020 lows, the coronavirus panic lows, because that was a 10-year bear market and then a once in a century panic. If a company has stayed above those lows and continues to exist today, it's a good sign that the management has been pretty prudent with the way that they spend funds and that they haven't diluted excessively.
That's a really interesting metric that I actually had never considered before. So thank you for that. Let's end on discussing any other commodities outside of the gold and silver space that you're watching at present that you think present a potential opportunity ahead, whether that's the uranium space, copper, other base metals, oil and gas, anything you're watching right now. Willem, I'll start with you.
Well, these three names are on top of our list. Uranium I think, has seen an end of its correction, so starting to move up. And if you look at copper, if you look at the supply and demand in copper, is getting very interesting because we've seen the closure of the Panama Cobra mine, which is almost 3% of world copper production in Panama for political reasons. They're talking about a restart, but that will take some time. And now we have had some bad news coming from the DRC, from the Congo this week, where Ivanhoe Mines has had some technical problems in their underground mining operation. And that mine could, need to stop production for months now. And that could really switch the copper market into a production deficit for the next few months. So I wouldn't be surprised that copper will start to break out on this unfortunate news. And that might start a rally in the copper names because copper has been held back a bit for the last, let's say 9 to 12 or 18 months because of the growing risk of a worldwide recession. And as you mentioned, the energy space is interesting as well because of the worldwide risk for a recession. The energy space has come down quite a bit. Oil is trading around 60. once the central bankers are starting to lower rates and put more stimulus to kickstart the economy, we expect that later this year, I think energy will start to do very well. So we're watching that space very closely to be able to pick up.
Excellent. And Christopher, what are you watching right now when it comes to the commodity space?
I'll tell you, Jesse, I am uniquely focused on the precious metals still right now because bull markets in precious metals, which we are still in, do not end on lackluster sentiment, which is still what we're seeing today. They don't end when the average person is not interested. They end when everyone is tripping over themselves and people are banging down my door and calling my phone number in the middle of the night for my latest gold stock. So that tells me we're not at the end. And ends in commodity cycles they don't just peter out and roll over. They end in fantastic final waves. So most of my energy is still in the precious metal sector right now. I'll give the analogy that if you go back to the 1970s cycle, leading up to that peak in 1980, there were only a couple large cap miners that currently exist that existed back then. One example was Hecla. Hecla was actually around back then, large silver miner. If you look from 1974 to 1978, when silver had been consolidating at about $6 per ounce for those 4 years, before it made its final run up from 6 to 50, Hecla actually fell by 85% as silver was sideways for those entire 4 years. And that's entirely due to sentiment. It's entirely because the average person is not interested in silver when it's just moving sideways, even though it's a fairly stable backdrop for the mining operations. In the last 15 months of that cycle, Hecla moved higher by 1,000% to catch up to where silver was. So my read on the sentiment gauge is that we are experiencing something similar to that right now, where you have a lot of these defined resource companies, even a lot of major producers that are down 40, 50, 60. I know some defined companies that are down 80% from where they were just 5 years ago, even though the price of the metals is higher. And so I'm looking at these things and I'm saying, this deserves my entire attention right now. When we get that sentiment shift and it's clear everyone's piling over themselves to buy our shares that we're buying now, I'm going to start looking at energy and platinum specifically. But right now, precious metals is my focus.
Well, gentlemen, this has been a fantastic conversation. Greatly appreciate your insights. Willem, tell us about the Commodity Discovery Fund.
Yeah, we're one of the very few of the commodity funds worldwide who's really specialized in the early stage, large discoveries. So we're metal agnostic, although 50% of our money is invested in gold-related projects. And we're open to investors worldwide. And we currently have 150 million Canadian under management. We're an Amsterdam-based fund and, well, open for business. Thank you.
Great. I'll put a link to the Commodity Discovery Fund in the description below. Christopher, tell us about iGold Advisor.
Yeah, iGold Advisor, we have a newsletter which is for your retail gold and silver investor. We publish all of the gold and silver mining companies that I am buying and selling personally. So you get flash updates going right out if you'd like to join us. We also have a service called Elite Private Placements, which is for higher net worth individuals. And what I do is I go out and I negotiate with these companies. I don't take any fees or any kickbacks from the companies. I negotiate with them because I take a chunk in every private placement that they do. And so I represent a group of investors who want to come in together and join me in these private placements.
Fantastic. I'll put a link to iGold Advisor in the description as well as both of your X profiles so people can follow along with you online. Gentlemen, it's been a blast. Thank you so much.
It was a pleasure. Thank you.